Hey there everyone, Dave Keller here with Market Misbehavior. Today we're going to do a choose your own adventure style video where we lay out 4 potential scenarios for the QQQ, the Nasdaq 100, between now and mid-January. So going out about the next 6 weeks through year end, through the holiday season, into the beginning of next year. A lot of question marks for investors right now, whether the resilient AI euphoric uptrend of 2025 will continue into the new year, or if we are just at a bubble situation ready to burst. December is going to be a down month. You're going to have an opportunity to review each of those 4 different scenarios, vote on which one you see as most likely and why. Before we get to the 4 different scenarios and their implications, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions, and when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called KOYFIN. KOYFIN really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on KOYFIN are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/KOYFIN, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so before we get to the current chart of the Nasdaq 100, we're going to go back to the last time we did one of these Choose Your Own Adventure videos. This was back in early October. Around October 8th, October 9th, we did a video on the S&P 500. We laid out 4 different scenarios. The super bullish scenario, which involved the S&P regaining its mojo, getting up to 7,000 by late November, right around Thanksgiving, down to a very bearish scenario where the S&P would go down and test its 200-day moving average going into Thanksgiving. Let's look at the charts and talk about what actually played out. So here was the chart that we shared. Here were the 4 scenarios. So we can see here, from this point, which is around 67.50, we laid out the super bullish scenario, which would have us going back up to the upper boundary of this long-term trend channel. Obviously, that actually happened for a little while, right? And by late October, it looked like scenario 1 was going to play out. However, the weakness, the big change from the end of October to the beginning of November was very meaningful. And so scenario 1 no longer played out. Scenario 2 had us going down to the lower end of the trend channel. We didn't stop there. We bounced off of that general level, bounced off the 50-day, but continued lower. So if you look, almost precisely, we've filled out scenario number 3. So even though there was initial strength a couple weeks after we did the video, by the end, the price ticked almost exactly to the tip of our arrow number 3. So if last time around, if you voted the mildly bearish scenario, scenario number 3, you were absolutely right. Now, since that point, since mid-November, going through the Thanksgiving holiday into this week, the first week in December, the S&P and the Nasdaq have recovered very, very quickly. Now the question is, did the S&P and the Nasdaq continue that upswing that we saw during the shortened holiday week around Thanksgiving? Does that continue here in the weeks to come as we go through the Fed meeting, the traditional seasonal strength in December, etc.? All right, with that in mind, let's look at the chart of the Nasdaq 100. We'll take a longer-term view to start, then we'll zoom into these 4 scenarios. As a reminder, the point of this exercise has a couple benefits, right? Number 1, we want to force ourselves to think about different scenarios. It's very easy to fall victim to what's called confirmation bias, right? You decide you're bullish or you're bearish on a particular chart, and then whatever the evidence tells you, you kind of ignore it because you've already made your decision. The point of charting and technical analysis is to let the evidence dictate your decisions, not your emotions. So we don't want to make our decision first. We want to gather evidence. We want to force ourselves to think about different scenarios. Benefit number 2, you think in terms of probabilities, right? All 4 of the things that I'm about to show you are possible. They could absolutely happen in the next 6 to 8 weeks. None of these is, whether they're improbable or not, they are possible. So by forcing ourselves to think about these different scenarios, we can start to assign probabilities. Which do I see as a likely scenario? Which do I see as an unlikely scenario, but one that I still probably should be thinking through just in case that's what actually happens? Finally, it's to make a decision. It's decision time. Once I lay out the 4 scenarios, which do you think is the most likely scenario and why? Please take a moment, drop a comment below with the scenario that you select and your explanation. 4th benefit then, and this is when it gets really cool, you get to share your own perspective, but also benefit from all the other people that share your perspective. Some of the greatest benefits, I would say, or one of the best lessons learned I've had as an investor is sort of the water cooler conversation, comparing notes with someone else. I'm bullish, they're bearish. We get to kind of hear each other out a little bit. That's what you're going to find in the comment section. Different perspectives. Some people pretty bullish, some people kind of bearish, some people in the middle. And by thinking about and reviewing, reflecting on what other people are seeing and hearing, maybe that adds more confidence to your own choice. Maybe it stretches your thinking a little bit, shakes you out of your little biased bubble. All right, here are the 4 scenarios. But to start with, the Nasdaq 100, similar to the S&P, has been in a remarkable uptrend phase. From the April low really to the end of October, the Nasdaq 100, along with the S&P 500, made new highs, new swing highs every month. We keep making higher highs and higher lows. Arguably, that's all changed in the month of November, right? So while October, the Nasdaq 100 made a new all-time high just above 635 last week in October, just before Halloween. From there, we've pulled back a little bit. The Nasdaq 100 bounced off the 50-day moving average, traded briefly below it before finding support at a previous resistance level, right? Just above $580. We can see we bounced off of that level, and currently, as we're recording the video, Nasdaq 100 is trading right around 620. This is the QQQ, the Nasdaq 100 ETF that we're using. All right, scenario number 1, the super bullish scenario. In this case, we're basically taking a trend line, going back to the initial thrust higher, stalled out in May. Then the trend in the Nasdaq 100 sort of settled into a pretty consistent uptrend of higher highs and higher lows. So if I take the highs in May and June and July and August and then October and kind of connect it to where we are now, that would actually put the Nasdaq 100, the QQQ, up around 680 to 700 by mid-late January. So that would basically say this pullback that we saw in November was just a short-term pullback. It was an actionable pullback. This is a very buyable dip among many. We're going to ride this trend higher, and the initial thrust higher that we saw in the last 2 weeks just continues in a similar pace, which would get us up to that kind of $680 to $700 value by the 3rd week in January. So that's the super bullish scenario. Now, what would have to happen in this scenario? I would argue the Magnificent 7 stocks would have to have a big surge higher. We have some of those charts like Alphabet, like Apple, that are breaking out to new all-time highs here November into December. But a lot of them are not, right? Charts like Microsoft, charts like Meta, charts like Netflix, charts like Tesla are all kind of pulling back off of those all-time highs, and a number of them are testing support, if not failing to hold support, in the case of something like Amazon. So that sort of mega cap growth trade would have to come back in a big way, particularly semiconductors like NVIDIA, AMD. What else would be in there? Empower. These are the charts, KLAC, LRCX. These names would have to have a big surge higher because those are the juice. Those are the big weights in the Nasdaq 100 and certainly in the S&P as well. The only way the Nasdaq 100 gets significantly higher if that mega cap kind of AI trade shakes off the doldrums from November and sort of re-exerts itself in a leadership role. So the super bullish scenario, you're basically saying no real pullbacks beyond what we've seen so far. December into January, a lot more optimism. Then let's see what happens in the rest of Q1. All right, scenario 2, the mildly bullish scenario. What if the optimism is there, but if it's not as meaningful? Maybe some of the semiconductors work, but other of the Magnificent 7 stocks do not do as well. Maybe the leadership rotates into other areas of the market, things like financials, industrials, maybe even healthcare, which have shown some signs of life here in the last 3 to 6 months. Maybe they end up performing a little bit better. So It's not a bearish scenario. The market's still bullish, but the leadership maybe changes a little bit. And that scenario, something like the Nasdaq 100, which is very tilted to those mega cap growth stocks, probably isn't going to be able to surge that high, but it could drift higher, right? It could just kind of dribble higher, similar to what we saw like back here in June and July. And if we would advance at that general pace, that would actually mean a retest of the October high right around 635 to 640. Maybe we go a little bit higher than there, but not much, right? Scenario number 2 basically says we continue to recover, but the mojo is lost, right? The big swing higher is not there. It's just sort of a general drift higher. Maybe the volatility remains low. The VIX remains below 20. Things are working, but it's not the right stocks with the right magnitude to propel the Nasdaq 100 to blow out their previous all-time high. Maybe at the beginning of next year, kind of sitting back at those October peaks and debating as a group of investors whether it's just a big double topping pattern for the QQQ. So that's scenario number 2, the mildly bullish scenario. Scenario number 3 and scenario number 4 are both bearish scenarios. And I would say there's a couple different ways that those could play out. But particularly scenario number 3 most likely means the mega cap growth stocks are no longer the leadership. Maybe it's defensive areas of the market. Maybe it's value sectors like financials and industrials. But the technology trade kind of stops, right? The AI euphoria is gone. And while the AI trade starts to stall out, there are enough other things working that even though the Nasdaq 100 is down, it's not down a lot. Even though some of those mega cap growth stocks are down, other areas of the market show a remarkable amount of strength. And so there are plenty of opportunities. It's just not in the right names that have the biggest weights in our benchmarks. The mildly bearish scenario, scenario number 3, could also be driven by macro headwinds, right? We've come out of this government shutdown period. We're just starting to get macroeconomic data starting to be reported. What if the data that we've been missing here over the last month or so ends up being not as encouraging as we thought? Maybe it implies that the Fed is going to struggle to handle their dual mandate of maximum jobs and minimal unemployment, but keeping prices in check. And as a result, the market kind of gives a vote of no confidence and starts to drift lower. In any of those situations, the mildly bearish scenario, scenario number 3, I would say probably has a retest of the November low. We break back below the 50-day moving average in the month of December. We end up down around 580 to 590. That would basically be a retest of that November swing low. So we're no longer going up, but we're not really breaking down to the point that everyone's all bearish and thinks this is the end of the world. It's not a doomsday scenario. It's just more of a sideways, choppy, sloppy, unrewarding scenario. And unless you're an options trader basically doing some sort of straddle or strangle, you probably get super frustrated because the major indexes are essentially flat. Could be great opportunities for stock picking, could be plenty of charts that are still working, but the Nasdaq 100 basically remains in this range and finishes late January in the lower end of the range. That's the mildly bearish scenario, scenario number 3. All right, you always have to have a doomsday scenario. Scenario number 4 is the super bearish scenario. We start rotating lower and we don't stop. This down thrust that we saw in November was the initial impulse move to the downside. The October peak ends up being the top for the Nasdaq 100 going into the beginning of next year. This rally that we've experienced from late November to early December is just what's called a dead cat bounce, a short-term counter trend rally before the big wave 3 or wave C begins, and we start rotating lower and we don't stop. The AI trade isn't working. Besides that, some of the value sectors don't work as well as you'd want because growth is struggling so much. The Nasdaq 100 is down, and it's more defensive areas of the market like utilities, maybe old school telecoms, real estate, consumer staples companies, low volatility stocks end up being better because the VIX has now spiked above 20. And so volatility is your enemy, not your friend. So the growthy, volatile stuff underperforms dramatically. The Nasdaq 100 starts to be bid lower and lower. In scenario number 4, I would say the 200-day moving average comes into play. And for an initial downside target for that move, I would be eyeing the 38.2% retracement of the April to October move. So the April low, just above 400, the October peak, right, just below 640, 38.2% of the way down. Is just below $550 a share. That's just below the 200-day moving average. So I'd be looking kind of in that 550 to 560 range, which would basically mean kind of right around the 200-day, right around that first Fibonacci support level. The market sells off pretty good, and by mid-January, we have to talk about how December, which is seasonally a very strong month, was an absolute disaster. We're all struggling to determine whether we've pulled back enough, whether some of those stocks which have now probably had massive pullbacks, whether that's enough, whether it's a buying opportunity or a reason to just be completely defensive through the remainder of the first quarter. That is the very bearish or the super bearish scenario number 4. There you go. Those are your 4 potential scenarios and their impacts. We've got scenario number 1, the super bullish scenario, which would take the Nasdaq 100 up towards 680 to 610 as we resume the uptrend phase that we experienced through much of 2025 after the April market low. Scenario number 2, the mildly bullish scenario. We drift higher. We don't get much above that October peak. Maybe the right things. Some things are working. Some things are not. Generally, the trend is okay, but the volatility remains low. Scenario number 3, the mildly bearish scenario. We rotate lower. We don't get much below that November swing low. The bounce that we've experienced in the last couple weeks is just a short-term bounce before the downtrend continues, but enough things are working that the market sort of holds its ground okay. Scenario number 4, the very bearish scenario. In this scenario, the recent rally is is setting us up for the next move lower. We accelerate to the downside. We test the 200-day moving average. We test a key 38.2% retracement level, get down to around 550, 560 on the QQQ by the 3rd week in January. Which of those scenarios do you see as most likely and why? Please take a moment, drop a comment below with your vote and why you think that's the most likely scenario. After you've done that, check out some of the other comments. See if it stretches your thinking. See if they agree or disagree with what you see. And remember, the point of this is to expand our thinking, to break out of our biases and open our minds to all the benefits and all the potential movements in these charts over the next 6 to 8 weeks. If you want to follow what's actually happening in the markets here for the next 6 to 8 weeks, check out my market recap show, Chart This with Dave Keller. We put that out every weekday after the close here on my YouTube channel. For Market Misbehavior, I'm Dave Keller reminding you it's always a good time to own good charts.